Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hello, I'm Paul Bubney, Managing Editor of GlobeStreet.com, and welcome to the Knakal News Network. We're here today with Bob Knakal, Chairman of Massey Knakal, and we're going to be talking about sales in submarkets outside of Manhattan. Bob, Manhattan last year was not the standout performer per se. What was?
Well, actually, Northern Manhattan was the submarket that performed the best last year, Paul. Normally, the Manhattan submarket, and we define Manhattan as south of 96th Street on the east side and south of 110th Street on the west side. Normally, the Manhattan market is the leader, but in terms of overall volume and activity, Manhattan lagged last year to a greater extent than any of the submarkets. And the submarket that did the best was Northern Manhattan.
For Northern Manhattan, what did the numbers look like last year?
Well, Paul, the number of properties sold was 400, which was up 22% from the 328 buildings that sold in Northern Manhattan in 2012. But remarkably, the dollar volume of sales almost doubled. Last year, there were over $2 billion of investment sale activity in Northern Manhattan compared with just $1.1 billion back in 2012.
What brought people to Northern Manhattan last year?
Well, I think what we saw was a tangible shift away from Manhattan to Northern Manhattan and the other boroughs. And this usually happens when the market gets better. Values in Manhattan escalate very rapidly, to a more rapid degree than the outer boroughs do, and that drives yields down. And the search for yield drives investors increasingly out of Manhattan to the outer boroughs.
Looking at the outer boroughs one by one, how did Queens do?
Well, the number of properties sold in Queens was up considerably last year. In the Queens market, we had 750 properties sell, which was up about 17% from the 640 that sold in 2012. And the dollar volume remained essentially unchanged at about $2.25 billion. But Queens is a marketplace which historically has very, very low turnover, probably the lowest turnover borough of all the submarkets.
And when you think of the outer boroughs, for many people, the first word that comes to mind is Brooklyn. But
the number of properties that sold last year in Brooklyn was down about 2%, about 1,443 properties sold. So that compared fairly well to 2012. But the dollar volume of sales was down 25%. But the thing to keep in mind is that we had some very, very extraordinarily large sales in 2012 in Brooklyn. Kings Plaza Mall is an example of that. So Brooklyn is doing great. And as you say, Brooklyn and some parts of Brooklyn are actually competing with Manhattan in terms of values on a per square foot basis.
See that possibly creating a little bit of a tug of war between Manhattan and Brooklyn as far as investor appeal?
Well, I think increasingly we're seeing institutional capital look for investments outside Manhattan. And for decades, that institutional capital wanted only to be in Manhattan. Foreign capital wanted only to be in Manhattan. And what we're seeing today is that the large institutions are increasingly looking to the outer boroughs.
For the moment, while Northern Manhattan was the real standout last year, did that kind of cross over the river into the Bronx?
Yeah, actually last year the Bronx had its challenges. Actually, the number of properties sold was down 13%, and the dollar volume in the Bronx last year was down about 7%. And that could be just a cyclical thing. There are a number of larger properties in the Bronx that are currently on the market that we expect to be sold this year, and we believe that volume is going to be up across the board. In summary, in 2013, the outer boroughs did relatively better than Manhattan, which normally leads the pack. Most impressively, Northern Manhattan showed an increase of over 80% in the dollar volume of sales, eclipsing the $2 billion level for the first time in history. This figure was up over 80% from the $1.1 billion in 2012. Northern Manhattan also showed the largest increase in the number of properties sold, 400, up 22% from 328 in 2012. We believe that these positive trends in the boroughs will continue into 2014.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.